All right, well, welcome to the November edition of the Beyond Wealth Advisors Economic Update. I'm John Cleaver, partner, senior financial advisor, and with me, as always, is
Dennis Bacon, the Chief Investment Officer at Beyond Wealth Advisors.
And we're here today to come back and give you the next rendition of kind of what's going on in the economic world. And in the current environment, it feels like this economy is just kind of going nowhere. The last couple months at least, we've just kind of, from an economic standpoint, just had not a lot to talk about. And if we think back just a week ago or so to Halloween and the bag of tricks and treats, that's kind of what the economy has given us, some good and some bad. So, Dennis, can you maybe unpack that a little bit?
Well, I will say that the Halloween this year we had less trick and treaters, but unfortunately in the economy we probably have more. We've had some negative things. The manufacturing continues to be down, but the growth in the economy is accelerating a little bit surprisingly in the third quarter. The S&P 500 declined for 3 straight months though.
Right.
And but inflation is decelerating. It's down to around 4%, right. Depending on which indicator you look at, and both of those are at a much slower pace than what it has been for about 2 years. But mortgage rates are up over 8%.
Yeah.
So but on the other hand, crude oil in the month of October set at all-time high. So those are good things. And then there's that one thing that happened early last month. Over in Israel.
A month today.
Yeah, right. Over in Israel, when Hamas attacked Israel, and now we have the ongoing conflict, the war, because they declared war, and all the things that go along with that, and also the continuing Ukraine conflict that we have going on. So these present a lot of headwinds. There's some good things out there, but really there's a lot of headwinds that seem to be pretty strong and have a potential of escalating a whole lot more than what we're seeing. The positive things continuing, I think there's more risk on the escalation of some of these things that are happening negatively, but this seems to change month to month anyway.
Right.
So,
well, that's certainly how it's played out, and we've been talking about for a while now, just where some things tend to do good, other things are not doing good, and other things may do well. And so we've actually seen, really stocks underperform the last 3 months. However, since about the 1st of November, these last, 5 or 6 trading days, equities have been up. The 10-year Treasury has come down off of its high of over 5%. And so, okay, is this a reversal? Are we seeing some light at the end of the tunnel, or what do you think?
Well, we're certainly happy to see what's gone on the last few days in the market. It may or may not be a signal of a turning point. I would describe my view as positive, but still very concerned. I'm concerned about what the next moves happen, whether it's a governmental move, whether we look at global events or economic shifts. All those things are at a high intensity level, if you will. Typically during election years, it's coming up this next year. Typically, you don't have a lot of big moves economically during those years, but sometimes there are some big global events and governmental moves that happen that are, being the person that I am, I suspect that these are done strategically to help one party or the other achieve their election goals, but at the governmental side. But there's also global events that could come into play there. So those are risks.
So with all that in mind, though, there still is some kind of opportunity out there, either for maybe the equity investor that's looking for an opportunity to buy where we're off our highs. And so, there's certainly the longer term investor that may want to consider that. But we've also had opportunities in the bond market or the fixed income market. So
I would say the biggest opportunity right now is in the bond market. We're at interest rates that we really haven't seen, even with the drop in the last week or so, down to about 4.6 in the 10-year Treasury. We're really in an environment that we haven't seen for probably 10 or 15 years, since actually 07, 08. So I would say the biggest opportunity is to lock in some interest income or stability going forward with like ladder bond portfolios, different things like that, whatever's appropriate for your situation. I think that's really is the opportunity now. On the equity side, I think there's still a reason for a lot of caution there. I'm not saying fear. That's different than caution.
Sure.
I'm not really fearful right now, but I think being vigilant and aware of what's going on and not getting out over our skis, not going out to. This is not a time to go make a big move for the anticipation of a robustly positive economy. Matter of fact, I would say it's probably a time where we've had some run-ups in some AI stocks.
Sure.
They're kind of one-offs. Virtually everything else in the economy has been lackluster to negative for this year.
Right.
So that's why I say the caution has to be there, because there's just too many headwinds.
Right. Well, to me, it just screams, just continue to stay focused on your objective, stay true to your financial plan, stay true to your, your longer term goals, and obviously, talk with your advisor and make sure that you're in alignment with, what you want to accomplish in the next short term and long term. Obviously there's lots of things happening always, but how that impacts what we do from a longer perspective could be different.
And I agree. I think that now's the time to remember what your long term goal is. You should have established a baseline strategy that you're going to employ, and now's the time to have that employed, not trying to react or what I term trying to catch an edge. You're not trying to catch that one edge that'll propel you forward. I think now, there's been some very well-known investors that says sometimes you make more money by not losing money, and sometimes you're wrong on whether you might lose money, and certainly, I've probably been guilty of that. But on the other hand, I'd rather be wrong on not losing money.
Sure.
In other words, be a little too protective than be out over my skis and then I think of snow skiing. Then you all of a sudden find out you're going over a cliff. For some people like to do that. I'm not one who likes to do that. So
absolutely.
That's just I think it's just a time that we have to be very vigilant. I think it's probably my word that I look at for now.
I love it. All right. Well, that's going to wrap up the November edition of our economic update. We certainly want to wish you a very, very happy Thanksgiving, and hopefully you'll have opportunity to spend time with friends and family and be thankful for all that you have in your life. And we'll be back in December for the last edition of 2023. And until then, thanks for tuning in.
Y'all have a wonderful holiday.